we have some interesting developments overnight. So move up off the lows, very strong. A move this strong almost guarantees a second leg. We have this, which I thought was it, was not it. Now we have a two-legged pullback. A two-legged pullback is the normal form of a pullback in a bull market. So if we look at 1, 2, 3, 1, 2, 3, it's just the normal form. Now, there's some things that you ought to know about the two-legged pullback. The strongest part of the two-legged pullback should be the second leg. This is what Elliott wave theorists, and please don't look up Elliott wave stuff, it's absolute bullshit. But this part they actually have right. What they call the C wave is the strongest bit. Now, the question that you're going to be asking is this the end? Is it going to just blast up? And sadly, no, it's not. How do we know? It's close to the end. It's so close. All right. We have this obvious triangle thing here, right? Like whatever form it takes. When triangles get out to the, let's drop it down again. It looks like it, so actually we're actually a little bit past the triangle end. So when triangles get right to the end, excuse my bad drawing skills, before they break, they're extremely prone to whipsaw. Now, the reason for this is that if the market was ready to go up, it would have broken out right here. If the market was ready to go down, it would have broken out between here and sort of here. The fact that it didn't break up and it didn't break down, what's that telling us? It's telling us very, very loud and clear that the market is balanced on a knife edge. So when it gets right to the tip of a triangle, you can expect whipsaw, which is what we're getting. Now, back to the daily. We have an inside bar. An inside bar is a bar with a higher low and a lower high than the previous bar. Now, an inside bar is it's an edge. You know, you can see one here. Whichever side it breaks to the downside, it usually has follow through. It's not a particularly strong edge. It's the weakest edge of all the patterns I trade, except when it's combined with, say, a retest variation sell, highest high in 10 bars, one or more lower closes, one or more higher closes, inside bar break the bar low. Or a double inside bar. There'll be one sooner or later if we look. I couldn't be bothered. So anyway, in context, the very strongest part of an inside bar edge is when it fakes out. So normally inside bars work like this. Whichever side that it goes to, we expect a little bit of follow through that way or that way, right? But in this instance, we know we're very close to the end of this move. Why? Because strongest part of the corrective phase usually is very close to the end. We have a little bit of follow through and we're balanced on a knife edge. If we're balanced on a knife edge, we can't have bulls ready to just power over the top. What can happen is a little fake out shakeout. So what we're looking for is either the market to break the low side first and then start a very strong move to the upside, or start a fake upside and then a slightly more downside and then do that. Which way is going to happen? I don't really think it's possible to know right now. Why isn't it possible to know? Because we're balanced on a knife edge. If something's balanced on a knife edge, a little, breathing on it can push it around. And let's not forget which day it is. It's fucking Sunday, and everyone knows Sunday is the day where bullshit happens. And there's a reason for that. It's because fewer traders are at their screens, fewer whales are at their screens, fewer institutional traders are at their screens. So someone playing games can move the market really a lot easier on a Sunday than he can any other day. Now, if you wanted to manipulate the market to fuck with people's heads, Sunday is your day. And we've got a situation where the market actually is really fuckwithable right now. So I think the highest probability for today is that we're going to break to the downside. This downside is going to be fake. Very fake. And then someone who's likely to manipulate it down by selling will see the stops run here and the stops run here, push it down a little bit, and then jump in and start buying. And I think we're looking at this for the next leg, up to somewhere in the vicinity of here. That would really make sense proportionality wise. Maybe even further, actually. Actually, this is probably a first one. No, sorry, that's completely wrong. That's not where I thought it would be. I was looking at the wrong scale. I think the next leg is probably going to take us to here. So we should be looking at something like that for the next leg. That's, I think, the highest probability outcome. Anyway, guys, there you go.